Hey there, everyone. Dave Keller here with Market Misbehavior, and today we're going to talk about routines, particularly how to develop consistent routines using the Seeking Alpha platform. Seeking Alpha has been a long-time partner to the channel. Appreciate so much their support and excited to share with you some of the ways that I found to use Seeking Alpha to develop a consistent investment routine. And that word consistent means a lot. What I've always told people is a perfect but inconsistent routine is way worse than an imperfect but consistent routine. Consistency is more important than perfection when you're thinking about how you spend your time as an investor. Develop good habits, develop consistent habits of looking at the same information, looking at the same tools, gathering data in a similar way, and do that consistently. Wash, rinse, repeat every day, every week, every month. That is what I believe will allow you or empower you to develop consistent returns and consistent results. It starts with consistent routines, how we spend our time as traders or as investors. We're going to talk about three main questions that I feel like every investor needs to answer every day, and the tools I would use on the Seeking Alpha platform to try to answer those questions. Number one, what's happening around us as an investor? And I would argue with about 25 years of analyzing the markets that charts are a fantastic way of helping you understand the markets, but that's not enough, right? We need to gather a lot of evidence from different sources and really focus on what's moving, what's happening, right? If you're unaware, it's hard to make an informed investment decision. So we'll talk about how we improve our market awareness using some of the macro market data tools. The second, how am I positioned? How can you evaluate your portfolio and identify potential strengths, potential weaknesses? I would argue that in my experience, risk management is vital. Institutional investors I've worked with spend a lot of time thinking about risk management. Individual investors spend way too much time thinking about potential rewards, not nearly enough time thinking about potential risks. So we'll talk about how we can maybe flip that script a bit using the portfolio tools on Seeking Alpha. And then finally, how do you find new ideas? Once you've identified some potential areas of weakness in your portfolio, maybe you're ready to swap a position or two, where do you find that next stock or ETF that could deserve a place in your portfolio? All right, we're looking at the Seeking Alpha website here, and we're going to go through some of the items on the menu bar on the left side, and that's really where I would start, kind of familiarize yourself with the tools and capabilities and what to look at. So that first question, what's happening, right? So two things I would look at. Number one, I would start with market data, right? We can read news headlines, we can read research. That's all great. I hope you make time for those things for sure. But I always start gathering evidence. Before I read what someone else thinks about the markets, I want to develop my own investment thesis about what I feel is happening and what's important to me as an investor. So I have a set of things that I look at, and I would say that the tools that are provided here in this market data section give you a really good way of identifying some of those key ETFs and indexes you should be following. What's great about this page, by the way, is it's all driven by ETF links, which are all here in blue. So any of these items in blue are clickable links. You can dig into one of the sector ETFs, one of the factor ETFs, or anything else that you've seen. This is also an easy sort of cheat sheet for tickers you may know or may not know. So if you don't know offhand that the S&P 600 small cap ETF is IJR, it's right there, right? So we can quickly identify some of the key ETFs. And then, again, using Seeking Alpha's platform, I use other platforms for charting to get more detailed technical analysis work. And I think having those tickers makes that transition very, very easy and allows you to use Seeking Alpha along with other things as well. I would also point out on the left side here, there are different groups of ETFs and indexes depending on where you're sort of looking. I've starred a couple of these. Key market data is what we're looking at here. These are going to cover the major asset classes, the major factor ETFs, global ETFs, specific countries, other asset classes like bonds and commodities and everything else. It doesn't cover everything, but it has kind of the key ETFs you probably want to understand to be able to analyze stocks versus bonds versus commodities versus currencies. Other sections allow you to drill a little bit deeper, and another one I would highlight would be the earnings calendar. It is super valuable. We're kind of in a quiet earnings period here in mid-June, although names like Oracle, Adobe, and others are reporting, so they're out there, just not as many as in the meat of earnings season. But once we get to the end of June, once we get to mid-July, third week in July, that's when Q2 earnings will start to come out. this screen should be part of your routine. I would encourage you because what it does is it helps you just look forward and think about what names, what groups, what stocks have the potential to move significantly because of earnings, which are often a huge injection of volatility into a data series. So between the key market data, seeing where things are at, using these clickable blue links to drill into some of those ETFs and analyze them a little bit further, using calendars like the earnings calendar just to understand what's happening, and then maybe going through some of these other items to get a little further into things like growth versus value, style ETFs, factor ETFs. You should have a pretty good sense of what's happening around you if you spend the appropriate time. I find this crucial first step is one that we often like to skip. We jump into what's happening moment to moment. We jump into the short-term movements in the market. Do yourself a favor, start macro and go to micro, right? That's the general way we want to structure an investment routine. Start big picture and go to small picture. Go broad to narrow, go macro to micro. This is the macro part. Start with the big picture, and then we'll think about, okay, commodities are moving today. Let me dig into gold stocks or oil producers. The dollar's moving. What does that mean for these other charts? Let me look at those. Interest rates are popping higher. What does that mean for banks and other and home builders and others that are more interest rate sensitive? Start here. Start with the macro, and then we'll figure out what other things we need to look at as our routine starts to progress. The other thing I like to do is just look here for top ETFs. Because if you really want to understand what's happening out there, we really want to focus on where the returns have been, right? What are the trends? What are the themes or the movements that have been doing so well? And then I can start to make an informed assessment as to whether I think those moves are going to continue or whether maybe that's the end of the move and use some different tools in the technical and quantitative toolkit to try to make that assessment. What this is going to do is go to a list of ETFs ranked in order by their quantitative rating. And this is a proprietary quant rating that Seeking Alpha produces. They have a really cool quantitative team run by Stephen Kress. I've actually interviewed him on my podcast. On my YouTube channel, you can find that interview from earlier in 2025. He talked a little bit about the methodology that they use and how he approaches looking at multi-factor models. Should help you understand a little bit more about what we're talking about there. But here it's actually sorting in descending order from the strongest to weakest. All of the ETFs in their universe. I'm looking only at traditional ETFs, which I'll come back to, and I'm looking for only that are rated pretty highly by their quantitative model. And again, I'm looking at the strongest ones at the top. I find this list is super helpful to look at least once a week just to see what's kind of working, right? Global X Defense Technology, ticker SHLD. Nuclear Renaissance with nuclear and a lot of energy sources rallying higher. Greece, kind of a surprise for me as I'm looking at the charts that are in the top. Gold miners, actually the junior gold miners, GDXJ. And then you can see down the list. This is a great starting point to just see what's working. I can see that 4 or 5 out of the top 10 are all gold related. All right, let me dig into that theme a little bit more and see if I have enough exposure to that particular theme. Now, to customize this, by the way, in the upper right, you can go to Edit Filters. You can also go to Advanced Filters to select different things. Right now, I'm sorting on 2 things, the quant rating and the fund type. So under fund types, I'm basically saying I only want traditional ETFs. I don't want anything too crazy. I just want to have sort of like basic, classic, traditional items. And then I also looked for ratings, and I added the quant rating on there, so I can make sure that I'm limiting my universe to the specific ones that I'm interested in. So now I'm looking at traditional ETFs, which means no leveraged ETF or inverse ETFs. I just want kind of plain vanilla items, and then you can use the sliders here to look at stocks that are rated more highly within the in the quantitative rating system. A lot of resources on the website to learn more about their quant methodology if you want to dig into it a little deeper. That's a really good starting point I found to kind of focus in on the top performing sectors and asset classes and thematic ETFs that are out there. So between the market data screen and the top ETFs, you should have a pretty good sense of what's happening, certainly what the conditions are going into today's trading session. Now let's talk a little bit about performance, right? We want to then think about, all right, if this is what I see as the overall market condition, how am I positioned right now in my portfolio? So I have a test portfolio that I put in here. This isn't a live portfolio. Don't assume anything on this, and I actually don't believe I own any of. Actually, I do own the GLD, full disclosure, but other than that, I don't own any of these specific stocks, although I'm sure ETFs that I own probably have exposure to names like Alphabet and Amazon and Meta, because it feels like most large ETFs, growth-oriented ETFs probably do. But the idea of this is to look at my portfolio. If you go to the summary tab here, you're going to be able to add symbols in your portfolio. Again, I've done that ahead of time just to give us a sample list of things. And you put in positions, you can put in the actual allocations that you have. And the more information you put in here, the more it's going to help you understand how your portfolio is structured in terms of potential returns and especially for potential risks. One of the things I like to do is put my holdings in a portfolio into Seeking Alpha and then look and see what does not score well. What is ranked poorly based on the quantitative rating? Which does not score well according to Wall Street ratings? Which one has not been performing as well as I may have hoped? The summary tab kind of gives us an initial assessment. We can look a little deeper at dividends. I like to go to the health score, which actually shows me overall where my portfolio is in terms of which stocks are scoring where using their proprietary rating. I can see what analysts are thinking. I can look at the dividend consistency, or what they call dividend safety, and so forth. This is a good starting point. I think this is interesting just to focus on, all right, what outliers are there in my portfolio? Do I want to focus in? The ratings tab gives you a little more granular data, and this is actually super valuable. One of the things I noticed, by the way, this sort of model portfolio that I have has some growthy stuff like Netflix and Microsoft, has some more value-oriented names like AT&T, Caterpillar, Goldman Sachs. Look at some of the different grades that we see in terms of momentum. I can see stocks like Goldman Sachs, Boeing, AT&T, Netflix for sure, scoring very highly in terms of price momentum. That actually looks at the historical returns and looks at the strength in the price movements over time. But when I look over here, I can see for profitability, some of these names do not score particularly well. When I'm seeing growth or valuation, some of these names are not as ideal as I might want. And you can aggregate all those into what's called the quant score. And we can resort and say, all right, which are the names I hold that the quant model is actually scoring pretty well? Which are the things I hold that maybe the quant model is not scoring particularly well? You may notice, by the way, that some of these columns are different for the different items. And I just wanted to point out that for ETFs, it actually has ETF-specific columns. So ETF momentum, expenses, dividends, another one risk, and liquidity. And again, I would encourage you, anytime you're looking at an exchange-traded product, you really want to do your due diligence to understand the risks involved, understand how they're giving you certain exposures, and make sure you understand the liquidity. These proprietary rankings, I think, are a good starting point. I think that helps you understand, is there something about this portfolio that I need to understand about this ETF, and where do I maybe need to dig in a little bit further and do more deeper dives into what sort of bets they're making, how concentrated the portfolio is, the spreads, the fees, all of those sorts of things. I think these rankings using the letter grades in the ETF columns are a great way of just kind of focusing on, all right, out of these 50, 100 positions I have, which are the small percentage that I really want to make sure that I do a little more work on to confirm that I'm comfortable with all the risks that may be involved there. So I find that this portfolio tool, and again, we can go to holdings and get a lot more detail. And again, these are all model entries. These aren't actual holdings. I just put in some fake values just to give us some data to work with. But again, the more information you put on here, the better that it can help you understand the impact of dividends versus capital appreciation. Again, some of the risks involved using the ratings column and the health score column. So number two, second question that we want to ask ourselves as part of I would argue, your daily routine. Number one was, what's happening around us? Number two, how's my portfolio doing? And where are there opportunities maybe to upgrade my portfololio? Let's say we found a couple areas where, maybe a stock or ETF, we're ready to unwind that a little bit and take that bet off. And we want to think about where to allocate. Now we need to look for that third question, which is, where do I find opportunities? Where do I find new ideas? Couple tools on Seeking Alpha that I found pretty helpful for this. Number one, most obviously, the stock screener has some default screens. You can create one from scratch. I would encourage you to tinker with, something like this. Any sort of scan engine I've used that I enjoy it's all about the experience of trying to filter through the universe. Let me try some different criteria and see what names come up, and use that as a starting point to my analysis. But the great thing about the Seeking Alpha setup here is we already have some preset screens that others have found helpful. Things like top growers, top dividend payers, top value stocks. Stocks rated high based on their quantitative methodology, or some really good combinations. One of the ones that I really like looking at is the top quant dividend stocks. These are stocks that have high ratings for dividend safety, dividend growth, dividend yield, and dividend consistency. And if you're concerned about the market, maybe not today, but tomorrow or some tomorrow down the road, you're going to start to get nervous about the S&P 500 and the NASDAQ if and when they start to roll over. And dividends can be a great way of navigating and gaining income at a time when traditional growth stocks are no longer appreciating to the degree that we've seen here in the last month or two off of the April low. Dividends matter, but dividend consistency is especially important, because if a company kind of pays a random dividend, that's not something you can really bet on, right? If you're buying a stock for the dividend component, you want a high probability that those dividends are going to be consistent and they're going to continue to be paid out and even grow at the rate that we've seen historically, right? So companies that have been paying a consistent dividend for a while, so you can have a reasonable expectation that that's probably going to continue. Those are called dividend aristocrats, or some sort of nomenclature like that. I found that top quant dividend stocks is a great way to identify those. You can also combine things, so stocks with a decent yield that are rated highly along with the quant screen. And all this is doing is just give you some ideas. I would encourage you to start with some of those preset scans and then maybe tweak the criteria from there. See if I uncover some interesting options. And again, when you run that scan, you can look at the results, click through and look at charts and look at other information as well. Another feature that I don't find is probably used as much as it should is this comparison section. Now, this is designed to allow you to compare like A, B, ABC different stocks. All right, let me take these 2, 3, 4 different stocks, line them up, and just decide which one I want to look at. So if you have your, based on the scans and based on the other things we've looked at, let's say you boil it down to like 3 or 4 stocks or ETFs you're considering, I would go to this point, create a new comparison, enter those tickers, and then you'll be able to look apples to apples basis and line them all up and be able to compare them together. I actually like to go through some of these preset lists, things like AI stocks. Aerospace and defense, which has been one of the top performing groups until the last week or so, has started to roll over a little bit. Cloud and storage names, some of those growth stocks that have been doing so well recently. Gold ETFs, right? Looking at some of the hard assets, rocks over paper, things that have done well despite risk assets doing so well. Solar stocks, which have actually started to improve a bit with expectations that they will either be less affected by some of the regulatory changes from the new presidential administration, or certainly just provide another opportunity to generate the incredible energy needs of AI and cryptocurrencies and so forth. This is a great starting point, and when you go through some of these preset lists, it'll just give you an idea of how we can compare and contrast different stocks. And again, line them up in a similar way. So we can think about returns. We can do a brief analysis of the types of companies there are and what they're trying to do. And then again, I always use this as a starting point to dig a little deeper. And if you find a name that's interesting, again, dig deeper, right? Look at the charts, look at the fundamental data, look at the analyst reports, look at the quant model, and do a little bit further due diligence before you would decide to add any sort of position. So there you go. That's how I would use the Seeking Alpha platform to answer 3 crucial questions that should, I would argue, be a part of your daily investment routine. Number 1, what's happening around me as an investor? Looking at market data, looking at movements in ETFs, looking at what's worked over a look-back period to help understand how the markets have evolved in recent days and recent weeks. The second item is to evaluate your own portfolio, looking for areas of opportunity, looking for areas of potential risk, right? And focusing on which parts of your portfolio may not be helping you outperform so much anymore. Once you've decided what to maybe lighten up on, where do you reallocate that capital? That's where we're going to look at generating ideas and focusing on new opportunities. That's where I think the stock screener, the ETF screener, the comparisons tool on Seeking Alpha can be so valuable in just helping us identify potential opportunities. Which stocks and ETFs do I not own that may deserve another bit of attention from me? If any of these tools and techniques looked interesting to you, I would encourage you to check out Seeking Alpha. You can go to marketmisbehavior.com/Seeking Alpha for information on their current sale. They have a fantastic sale going on here in the month of June. You can actually get 20% off and also a free trial at the beginning for their premium level, which is some of the tools and techniques I've been featuring here in today's video. Also, Alpha Picks can be part of that as well, which is their where they hand select some of the names that score well based on their quantitative model, and then share a deep dive analysis into those individual stocks and ideas. If you sign up today using my link, you also have access to an upcoming webinar that's on June 17th next week, featuring Stephen Kress, the gentleman who I mentioned who runs the quantitative team at Seeking Alpha, who I interviewed on my podcast. He's a knowledgeable investor, a successful quantitative strategist, and really has done a fantastic job promoting quantitative factor investing to Seeking Alpha users. You'll have access to that Top Stocks webinar where they'll be talking about a market outlook for the second half of 2025, and Steve will be highlighting some of the top ideas using some of their quantitative models. Also, if you sign up today, you'll get an article available only to Seeking Alpha Premium members where they can read and learn a lot more about the second half preview and also some stock picks based on the quantitative model. Again, for more information on that special deal, go to marketmisbehavior.com/Seeking Alpha. It doesn't cost you anything more than otherwise. It actually will give you a little better deal, and it helps me make Market Misbehavior awesome. So check it out. That's it for today. I'm Dave Keller with Market Misbehavior. Thanks so much for watching. I hope this inspires you to develop good and consistent routines wherever you're at in your investing journey. And remember, it's always a good time to own good charts.